Hey everyone, there's a lot of talk around abundance, resources, and how all of this fits into our system. You may hear a lot of discussion about this energetically, but how often do you hear discussion about the inner workings of it financially in our economy? Today, I'm here to talk about how resources in the economy are impacted by the Federal Reserve. If you already know what the Federal Reserve is, let me know in the comments below. I'm Andrew Marks, co-founder of World Creative and also known as the Visionary Investor. I use predictive analysis to connect the dots between past financial regressions and future investments, but more on that later. If you're new here and you like what you see, please take a second to click the subscribe button below, and thank you so much for doing that. Okay, so let's get started with what the Federal Reserve is anyway. The Federal Reserve, which is also known as the Fed, is the central bank of the United States of America. The Fed is made up of three entities. Number one, the Board of Governors, which has 7 members on it. They're nominated by the President and confirmed by the Senate. Number two, there are 12 regional Federal Reserve banks: Atlanta, Boston, Chicago, Cleveland, Dallas, Kansas City, Minneapolis, New York, Philadelphia, Richmond, San Francisco, and St. Louis. And number three, there is the Federal Open Market Committee, also known as the FOMC. This committee meets regularly to assess the conditions and outlook for the economy. They are tasked with making monetary policy to reach the Fed's goal, which is to promote a strong U.S. economy. The Fed does this through working to achieve the following two things: maximum employment and low and stable inflation. And inflation is an increase in prices of goods and services. To learn more about employment, check out this video. And to learn more about inflation, check out this video. The Fed works to promote a strong U.S. economy through adjusting interest rates and therefore money supply. Interest rates are the cost of borrowing money. Think of it as the Fed is really managing the amount of money in the whole country, also known as its money supply. For details on interest rates and money supply, you can check out this video here. Generally speaking, low interest rate environments allow for an expanding economy. People pay less to borrow money for purchases like a house, car, etc., and then they have more money to spend elsewhere. People with more disposable income are able to purchase more goods and services, which drives up demand for these goods and services. An increase in demand coupled with rising production costs or supplier costs or shortages we often hear about at supermarkets or with gas leads to inflation. The price of goods and services needs to rise to keep up with overall rising demands and rising costs. And as the price of goods and services rise, well, that's simply the definition of what inflation is. So to control inflation, the Federal Reserve raises interest rates. As you may have heard, they did this year in May of 2022, using a short-term interest rate called the federal funds rate, which I talk more in greater detail right here. When interest rates rise over time, prices of commodities like raw materials fall in price and inflation reduces. We are starting to slowly see it happen as of May 2022. And as interest rates rise, unemployment often increases because businesses eventually need to let go of employees. In general, consumers and businesses start to spend less and try to save their money instead of spending it. And less consumers and businesses spend, the less money that is circulating around the economy, and this causes the economy in general to cool off or even to shrink. The economy essentially becomes weaker, and the Fed then needs to do something to make it stronger. So eventually in the future, the Fed will keep interest rates at the same level, or they may even decrease interest rates like we saw in 2020. The economy eventually grows again. So to wrap everything together, resources in the economy are impacted by what the Federal Reserve does with interest rates. Let me know what your thoughts are in the comments below. Smash the like button. Please subscribe to my channel if you're new here. Thank you so much for watching. I hope you learned a little bit more about interest rates and the Federal Reserve